Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, March 29th through Thursday, April 1st, 2010. Remember, folks, this week is a 4-day week in the markets as Good Friday has the markets closed on Friday. Now, let's get into the hardcore analysis of this video and really discuss exactly what's going to go on next week so we can be prepared. First of all, let's look back at last week. Last week was an interesting week for multiple reasons. You saw a lot of kind of upside early in the week, the markets continuing to grind higher on extremely light volume. We can go to the 60-minute chart right here and show that. So again, here you have Monday. You can see we had that gap down following the healthcare bill passage from Sunday night into Monday. The markets rebounded unbelievably well on extremely light volume and traded up nicely on that day. Tuesday it was extended. Wednesday the markets ended slightly lower. Thursday we had a big gap up, monstrous gap up, made new 52-week highs, but then ultimately by about 2 o'clock in the afternoon, folks, the market started to sell off and sell off extremely hard, closing the day flat. Again on Friday, after that big sell-off on Thursday afternoon, the markets came back, moving up initially early, and then they sold hard again, closing flat again. You have a small in spirit of bear flag pattern on the 60-minute chart. You can see it here on the intraday as well. This pattern right here, choppy sideways in spirit of. Now, while you can see that in spirit of pattern right here, you have to be prepared for next week, folks. And again, here you can see on the 10-minute chart, the massive sell-off. We went to the 118.17 level. That was the high on Thursday. That so happens to coincide with my master level of 118.15. I gave that level to all my members in the research center, all my members in the chat room, that would be the possible top on the markets in the short term, and sure enough, it pierced it by 2 pennies before selling sharply on Thursday. Friday, again, there's your little bit of an uptick, and then the market sold off sharply again to close flat on the day. Now, a couple things to go over on the markets going into next week. First of all, you have holidays next week. You have the Passover holiday starting Monday evening. That could create light volume for next week. You also have the Good Friday holiday closing the markets on Friday. So next week overall is a big holiday week. In addition to that, the jobs report will still be reported on Friday when the markets are closed in the morning. That could create more light volume early in the week as traders wait for that report to come out. So just be prepared. Next week overall, there's going to be some wishy-washiness, no doubt, but if volume is light, always look for a neutral to upside. Again, repeat, if volume is light based on the holidays, you should look for neutral to upside on the markets. If the markets do have volume based off of issues in Europe, issues in the Mideast, or issues in China, or any of the other countries out there, you may see the markets have more volume. That should create a situation where the markets should fall. It really all comes down to volume, folks, and then also you have to keep an eye on the dollar. If the dollar's weak, generally that will support the markets as well, and again, vice versa. If the dollar continues up, and that would generally be because of geopolitical risk. So if there is problems in Greece or Europe or any of these other countries, that would strengthen the dollar, therefore causing the markets to have a little pressure on them as well. So really, folks, ultimately, you're watching the global stage next week until you get the jobs report. You will have a lot of economic news coming out early in the week and all the way to Friday, but we'll cover that in a little while. Let's first look at the technicals on the charts. Number one, you can see that you have a little bit of a trend line extending from the high on Thursday at 118.15, that pivot master level that I did call as a high pivot point, all the way down to Friday's high here, and then the secondary highs on the way down. All of those levels are now resistance, but you closed right on it. If you get above that, your necktie right here, and a necktie is a cross between a 2-moving average period here. So you can see the 50 moving average, 200 moving average. That will create a little bit of resistance right here, and I'll put a small line right in that point so you guys can see it very clearly. All right, so again, the first level of resistance to get above is this line sloping down. If you have a small gap up, you'll do that very easily on Monday. It is very possible, again, to see that if there is no kind of issues on the weekend here over in Europe or any of these other countries. Now, you might say, well, why is that? Well, because what you had on Friday, in my estimation, is a little of that geopolitical concern off of the sinking of the South Korean ship, whether it was North Korea involved or not. So far, it doesn't look like it was, but more information is needed. You also had worries about anything going on in Europe over the weekend as well. That, in my opinion, did cause a little bit of a profit-taking going into Friday, just as on a concerned basis. If nothing goes on over the weekend, expect a small gap up in the markets on Monday, all right? If there's stuff does go on over the weekend, then obviously look for the dollar to strengthen. That pushes the markets down, creates a little more volume, and the markets will continue to sell off here and complete the in spirit of bear flag. So again, you can see how really this market going into next week is really watching the global setting. It's all about the global, kind of geopolitical risk involved out there. Again, if you have a small gap up, watch for resistance at 116.90. If you get through 116.90, you may go all the way back to 117.35 to 117.40. That will be resistance, a possible scalping opportunity next week. And if you get through that, you have to watch the 118.15 level. 118.15 will be a beautiful double top area and very, very good resistance at that point on the charts. If we do move up into that level coming into next week, you can look for a pullback, a small pullback off of it. Although, again, watch volume. If volume is very light, just look for the scalp. If volume's heavier, then you think you can look for a bigger play off of that level at the 118.15 level. Now, a couple other things, guys. That's the technical levels on the upside. To cover the downside, you can see a little triangular pattern completes the one on the upside here with the one on the downside. And if we come below that, you should easily go to double bottom. Double bottom will be intraday good resistance support, but it will not be extensive, all right? It will not be major on the global or on the daily setting. So you can look for a scalp there, but I would not get in the way. If the markets start to fall here, you can get that scalp out of the way, but then move away as the markets should fall lower. We'll go to the 60-minute chart now to take a look at that overall. Now, as you can see here, folks, really the in spirit of bear flag is very, very clear. In fact, you had a big one right here move down. You had a couple candles on Friday early and then the reversal and flush down. Here's another one, although you did hit this key trend line. This key trend line comes from this point, and if you scan all the way back on the charts, guys, look at this. If you take this point of interest here and connect it through, so that's your low on the gap up on the 5th of March. If you take that low all the way through, connect it to the gap down on the 22nd of March, you actually touched that low on Friday right here. All right, see that line right there? That is what gave you that support for a bounce late in the day and kind of that bear flag to start forming. So you still have to get through that. If you get through that, you're going to go down to a secondary level as well, which will be a little bit of support right around 116. 116, 115, 95 or so. That even number Pierce should be a little bit of support on the 60-minute. If you crush through that, you're going to look for this obvious gap down double bottom here. That was the Monday low from the healthcare, a kind of reflection the following day. And so, it was passed on a week ago Sunday, and then you have it right here on the gap down on Monday. That level will be very, very good support. That's at 115.25, and if you get through that, then you're looking at 114.60, 114.55 is the next big level of support. Obviously, then you have the 200 moving average down here at 113.75, 113.85 area, depending on when it hits, obviously, as this move will continue up on a sideways motion, so we'll get higher each day. Now, on resistance points, a move up obviously to the 117.50 level will be key on the 60 minute, and then obviously 118.15. 118.15 is universal across all time frames, folks. So daily, intraday, 10-minute, 60-minute, you name it, that will be resistance on the upside of the markets, and you should see a little bit of resistance there should we come up in that range. Now, let's go over a couple other things. Obviously, we can take a look at a couple stocks. Stocks have been an interesting play last week. You saw some with a lot of momentum, some which were very weak, a lot of wishy-washiness. Bank stocks overall continued to be pretty solid, except for Goldman Sachs. JP Morgan was a monster last week, folks. Absolute monster last week. But Goldman Sachs was kind of the opposite. Take a look at Goldman here on the 60-minute chart. Really, especially starting on Thursday, that sell-off just continued into Friday. A lot of concerns that the financials, especially the likes of Goldman Sachs, will get regulated because they make a lot of their money from trading, and trading, again, is high risk, as opposed to JP Morgan, which is more considered a pure bank. And again, if we get the chart up, you can see JP Morgan on the daily especially. Let's flip to the daily. Look at this move up. I mean, it's had sharp sell-offs and possible topping tails here on the daily chart, which we have to watch. But overall, look at that extension move as opposed to Goldman Sachs on the daily, which you can see has started to fall back down a little bit on that concern. Now, let's go over a couple other odds and ends going into next week that you need to pay attention to. We obviously know the holidays next week could create light volume. Light volume generally breeds neutral to upside in the market. At the same time as that, you have to keep an eye on these reversals we've had on the last Thursday and Friday session. That's the first time in a while, in fact, in almost 2 months, that you have seen the market selling good news. Selling good news in general, whether it was initial claims and some of these other numbers coming out on Thursday, and that can be a little bit of a signal. I just don't know if the markets will have enough in them to sell based on light volume holiday next week, especially going into the holiday weekend, 3-day weekend next week. So a 4-day trading week, as we said. Now, just be aware, folks, the Dow is not that far away. It's 150 points away from 11,000. For those of us that believe in somewhat of the conspiracy side of things and understanding the administration's involvement in the markets with the Treasury and the Federal Reserve, you may see a little sign of them wanting to push the Dow above 11,000 into the holiday weekend to get consumers happy and spending on that spending spree. So that is always a possibility based off light volume next week that they might want to push that up. We should know pretty early in the week, though, I would think. You can kind of analyze the markets, how they're acting Monday and Tuesday, and see if they have that type of strength to make that type of move up. But just be aware there's always that possibility. Now, let's go into some of the economic news next week, which I do think is significant. You also have Research in Motion's earnings after the bell on Wednesday. Be aware of that. Research in Motion's a big tech player here. Let's bring up that chart. You can see the daily chart on that. It's had a pretty impressive move overall, so please be watchful of that next week, Wednesday after the bell. It should be a big play for tech. Especially the cell phone carriers, the smartphone carriers out there. Monday, personal income and spending. Also Tuesday, Case-Shiller, consumer confidence. Wednesday, ADP, Chicago PMI, factory orders, crude inventories. Thursday, continuing claims, initial claims, and continuing spending, ISM. And then obviously on Friday, non-farm payrolls when the market is closed with the unemployment rate and average work week hourly earnings. So watch that stuff, folks. Should be very significant. We will talk to you next week. Come join the Research Center at In the Money Stocks. We'll see you then. Take care.